We all invest with a purpose. Whether it's for retirement, your children's education, travel plans, or your dream house. Whether you have short or long-term goals, investing in quality stocks can help you achieve them faster by making your money work for you. Did you know that you can be a part owner of some of the country's largest and fastest growing companies? The likes of SM, Ayala, Jollibee, and other household name corporations. Yes, it's possible when you buy shares of these companies through the stock market. Now, let's understand how. Let's take Jollibee as an example. Jollibee is one of the world's fastest growing Asian restaurant chains. Did you know that Jollibee is not just owned by a single person? In fact, it is owned by thousands of people, which could be you and me. How is that possible? If companies want to raise money to grow and expand their business faster, they can sell some shares of their business ownership to the public through an initial public offering or IPO. This is when they list their shares in the Philippine Stock Exchange to be sold to investors. Investors will need to open an investing account with a stockbroker to start investing in the companies listed in the PSE or the stock market. For example, the money that Jollibee will get from selling their shares to investors can be used to open more restaurants or branches and hire more employees. Once you buy shares of Jollibee, you become a part owner or a shareholder of the business. And because you're a shareholder of Jollibee, you can benefit from the company's future growth and profits. But also remember that the value of your stock investment may decrease if the company suffers a loss or performs poorly, which is why it's important to choose your stock investments well. As a shareholder, you can earn in two ways. First is through selling your shares at a higher value. If you buy shares of a company and it continues to grow and earn more money, the value of your shares may also increase. Now, if you sell your shares at a higher price than what you bought them for, then you would have earned from your investment. For example, Wilcon, the Philippines' leading home improvement retailer. The price of Wilcon in 2017 was about 5 pesos per share. In the last 4 years, Wilcon grew and performed well, and the price is now at 29 pesos per share. If you bought shares of Wilcon back in 2017 and decided to sell them at 29 pesos, then you would have earned almost 24 pesos per share. And that's a gain of more than 400%. Another way is through dividends. Every now and then, some companies give out dividends to its shareholders as a way of sharing its earnings. You can think of it like a bonus or income that you get from your stock investment. The portion of dividends that you will get are based on the number of shares that you own. For example, Meralco, the country's largest electric power distribution company. In 2021, Meralco had issued cash dividends twice with a total amount of about 12.80 pesos per share. If you owned 1,000 shares of Meralco, then you would have received a total of around 12,800 pesos in cash dividends. History has proven that investing in quality stocks can provide greater returns than other types of investments. Over the long term, stocks provide greater returns and protection against inflation. There are two ways to invest in stocks. First is through buying individual stocks directly using your COL account. You'll have more control as you'll be the one to choose what companies you'd like to invest in. how many shares, and when you want to buy them. Another way is buying indirectly through equity or stock index mutual funds, which is an easy and convenient way to begin investing in the stock market. Stock index funds are pooled investments collected from many investors, managed by professional managers, and invested in the members of the PSE Index. The PSE Index is composed of 30 of the largest and most active companies selected by the PSE that represent the overall performance of the Philippine stock market. It's important to spread your investments in different companies across different industries to manage and lower your risk. Buying stock index funds can be an easy way to diversify, as you're investing into the 30 companies that make up the PSE Index. Investing is the most effective way to build your personal wealth and secure your financial future. On top of that, it allows you to 1. Participate in the earnings and growth of successful companies, 2. Build protection against inflation, and 3. Help you achieve your financial goals faster. Successful investment requires discipline. Build the habit by starting a monthly savings and investment plan. As an example, some people try to follow the 50-20-30 rule. We recommend investing for the long term, as this solves the problem of short-term volatility or the choppiness in price. The stock market tends to go up and down in the short term, as it can be affected by economic, corporate, and even global events. But looking at the bigger picture, history shows that the PSE Index has climbed up in the long run, despite the short-term ups and downs. It is also important to invest regularly. It lets you buy stocks gradually over time at more affordable levels and gives your money maximum time in the market, which allows the power of compounding to work best for you. Entering the world of investing can be exciting, but may seem challenging in the beginning. But don't worry, because we're here to help you get started and guide you in your investing journey. COL Financial is the leading online stockbroker in the Philippines, trusted by close to 500,000 customers. Opening a COL account will give you access to an online platform where you can invest in both stocks and mutual funds. For as low as 1,000 pesos, you can already participate in the Philippine stock market and become a part owner of some of the largest companies in the country. It's easy, convenient, and affordable. In COL, we believe that every Filipino deserves to be rich. Open your COL account at signup.colfinancial.com and get started investing.